Hi everyone, Andy here. Welcome to the Crypto Wealth Cafe, brought to you, of course, by Dacxi, powering serious crypto wealth for serious crypto wealth investors. It is time for our weekly look at the market. Time to fire up the kettle, make yourself a nice, stimulating cup of coffee, a relaxing cup of tea, or if it's after dark where you are, no problem. Feel free to pour yourself something just a little bit stronger. Time to strap in. Slightly different show for you today. Let's get on with it, shall we? So if we start here at coin market cap, which is where we usually start, we can see that Bitcoin is this week 31,140. Ethereum 1,815 US, and you can see a little bit of movement, just a little bit down really from where we were 7 days ago. Of course, 60 days ago, completely different story. Bitcoin 26% down across the 60-day 3-month period. Ethereum, of course, down 43% across those 3 months. And, you know, the further down into the altcoins you go, well, the worse the story, really. Avalanche, AVAX, 70% down across 60 days. Near Protocol also 70% down. So, yeah, you can see that the bear market does continue. So that, of course, means the Fear and Greed Index still at extreme fear. 15 out of 100, did get down to 8 about the lowest we've seen really in the last few years. But yeah, nothing's changed really. Still fairly doom and gloom across the markets. On the Bitcoin rainbow price chart indicator, not a completely serious indicator, but a bit of fun nonetheless. You can see right now we're firmly here in this sort of what are we calling that? The light green, which means we're still cheap. Time to accumulate. Probably a good value buy is really what the rainbow chart indicator is saying at the moment. On TradingView, we can see, so we can see our old friend Mr. Volatility is in full effect. So if we try and zoom out a bit to the 5-day chart, you can see really how, talk about volatility, kind of goes just humming along, suddenly up, you think, okay, this is good. So the leverage guys, they'd be trying to go long with some leverage, and bang, they just get dumped on. So yeah, pretty hard for the traders, I would say. Let's try and zoom out a bit more. Yeah, you can see we are kind of just in this range since we hit those lows back at the start of May, and then just in this kind of range. But yeah, you can see the closer you zoom in, it's up, it's down, it's up, it's down. So not a lot of joy there for the short term guys, but I suppose, yeah, if you're a long term accumulator, a dollar cost average person, then I would suggest, yeah, now is probably a happy hunting ground for dollar cost average people, certainly for the future. But yeah, not really too much happening at the moment. So I thought it would be a good opportunity to do something a little bit different. So what do I mean by something a little bit different? Well, I suppose I think it's a good opportunity to talk again about the bigger picture opportunity that Web3, blockchain, tokenization. What does it all mean? Where are we? What happens next? And try and put it in a little bit of context. So bear with me. We'll have a little bit of fun. I'm just going to talk through a few slides that I've pulled together, and we'll see what kind of picture we can paint dear viewers, listeners, and watchers. So I suppose the story begins here. We talk about S-curves, we talk about technology adoption cycles, right? So yeah, typically new technology, new innovations, new cycles, they do tend to grow in S-curves. New tech generally goes from stupid to exciting to boring, right? So we see this across all new technology. S-curves: stupid, exciting, boring. The reason for that is simply because, this has been the model really for the last 50 years or so, and each new technology generation or innovation cycle, however you want to characterize it. So we can think of mainframes, those big mainframes that used to fill a room, PCs, then of course the web. We've seen the acceleration and the adoption of the web all around the world. And of course, smartphones, which is a classic one as well. The question, of course, is what comes next? What is the next big technology adoption cycle that will see this kind of same adoption wave, and again go from stupid to exciting to boring? The most recent one, of course, being smartphones. So smartphones have reached the higher end of that adoption curve. So they're now at the boring stage. So, if smartphones are boring at the moment, that's because the product has matured. The easy and obvious things have been done, and marginal improvements are now the name of the game. And if you think about it, that's exactly right for smartphones. Think about it, whether you're an iPhone user or Android, it's kind of the same at the moment. So a new kind of high-end iPhone or Samsung Galaxy, they'll cost you like $2,000, maybe $3,000 even for the really high-end models. But what are you getting for your $3,000? You're getting a really good phone, but the improvements on the previous generation iPhone or Samsung, they're not huge. The battery might last a little bit longer, the operating system will be a little bit faster, and the camera will be a little bit more impressive. But that's it really. It's it's still just a new iPhone, and that's because the product has matured. That's not bad though. I mean, that's cool in fact. So smartphones are now kind of a foundational layer. So at this stage, we ask ourselves, what is now possible that smartphones are mature and widely deployed all across the world? Smartphones are now that kind of platform, and we can start to build new and exciting things on that platform. And I think crypto, Web3, DeFi, NFTs, tokenization, the ability for anyone to trade using their phone from anywhere on the planet. All of this is possible simply because everyone now has a smartphone that is connected to the internet. So that is a good way of thinking about it. Another way, of course, is also to think about, what is the next S-curve, right? So what can we build on top of smartphones, or in fact, the internet? Another way of thinking about that is, what is stupid right now? What is at the bottom, the early phase of the S-curve, when a lot of people think it is stupid? A lot of people are questioning it, whereas the early adopters are very excited. Can we think of anything that might fit that? And I think Web3, blockchain, tokenization, crypto, NFTs, DeFi, this all fits into this, right? So what I've got here is there's just some headlines, recent headlines from newspaper mastheads, blog posts, saying effectively that blockchain, Web3, it's stupid. Stephen Dahl, very respected tech blogger, he says that Web3, excuse my language, is bullshit. Web3, a terrible idea that is ignorant of history and technology. Why Bitcoin is doomed to fail. There are many, many examples of people saying that Bitcoin is dead over the years, only to be proven wrong. The Atlantic, so this is from earlier this year, it said the crypto backlash is booming. The Spectator, Ross Clark wrote that crypto is dead in the Spectator just a couple of months ago. So lots of good examples of people saying right now in the stupid area here, that's where we are potentially for Web3, tokenization, blockchain, all that good stuff. Another way of thinking about this is often when people are challenging a new form of technology or calling it stupid, that can be really where the opportunity is. Because if you think about it from an investment point of view, up here where smartphones are now, that's it's a mature investment, it's a mature technology. The gains are made in this exciting phase. So, if you were invest into Apple right when they first released the first iPod or the first iPhone back here, Apple's share price, of course, did exceptionally well in that exciting period. Same with Amazon. People used to call Jeff Bezos extremely stupid. They used to love to criticize the idea that people would purchase books, the early CDs, music, and now, of course, absolutely everything is buyable through Amazon and deliverable within 1 to 2 business days, depending on where you are in the world. So in the early days, people laughed. They called it Amazon stupid. Now, of course, Amazon is a mature product, but in that exciting phase, a lot of people got really, really wealthy. So, yeah, we've established that people are happy to call blockchain a little bit stupid at the moment. Of course, this is not unique to Amazon or Apple or blockchain. This is traditionally how a lot of people react to a new technology. So, a great example, of course, is when the internet was in its early stages in the late 90s. Paul Krugman, who's a respected New York Times writer, in 1998 he wrote that by 2005 or so it will become clear that the internet's impact on the economy has been no greater than the fax machine. Now, Mr. Krugman could not have been more spectacularly wrong. Obviously, the internet has been an absolute game changer for the entire planet, and whole new business models are now possible due to the internet. I don't mean to pick on Paul Krugman, he's just an example. Here's another one. Back in, I believe it was around 1950, that Thomas J. Watson, who at the time was the chairman and CEO of IBM, he said that I think there is a world market for maybe 5 computers. That is how the chairman of IBM addressed the potential addressable market for computers at the time, 5. So severely underestimated the potential, the power and the adoption for this new and exciting technology use case. And again, this is just something that we see. There are countless examples throughout history, and I was researching this earlier today for this purpose, and I could actually do a whole show on it. But this people said the same thing when the first automobile was invented. Everyone thought that horses were much more efficient, and cars would be a short-lived fad. They said the same about electricity. When Edison was looking to experiment with electricity and the lead up to the invention of the light bulb, there's a great example of again, it's in the New York Times. A writer in the New York Times very sardonically criticizing Edison for wasting people's time in his pursuits of electricity, and then a year later, boom, he invented the light bulb. So many examples of this, and just a bit of fun there. Another good way of thinking about this, of course, comes from the author Douglas Adams. I couldn't resist including this because I'm a fan of Douglas Adams, who of course is famously the author of The Hitchhiker's Guide to the Galaxy. But Douglas Adams says, and this is when he was writing in The Salmon of Doubt, so this is a book of his from a decade or so ago. He said that I've come up with a set of rules that describe our reaction to new technologies, said Mr. Adams. And he said, number one, anything that is in the world when you are born is normal and ordinary and is just a natural way. It's a natural way. It's how the world works. Number two is anything that's invented between when you're 15 and 35. Well, that is new, it's exciting, it's revolutionary, and you can probably make a career out of it. However, says Mr. Adams, anything invented after you're the age of 35 is simply against the natural order of things. I think it's just a really great mental model, and I can kind of relate to this. And it's just, I guess it's just, as we get older, our brains, we tend to get stuck in the same mental models. It's the same way why once you reach a certain age, I think again it's similar. Let's say your mid-30s, it becomes much harder to discover new music and get excited about new music. People tend to stick to their favorite music up until that point. And again, it's the same thing here. It's just once you're over the age of 40 or so, it becomes harder to adapt to new technology, and you find yourself becoming naturally suspicious of new technology, new youth trends, all that stuff. So I think it's just a great truism and something to be aware of, especially for people that are interested in technology or trying to invest in new technology. You really got to keep an open mind. All right, so again, it comes back to this question. What happens when everyone is online thanks to the maturation of the global smartphone market, the global smartphone adoption curve? We're at the top of that S-curve. What are the next S-curves? What are the next big growth opportunities? So again, another way of looking at everything builds on what comes before, right? So early mainframes, then PCs, and then the web, and then smartphones. What comes next? What's the next generational change? What's the next foundational layer? The tech industry has a new center roughly every 15 years. Well, I mean, spoiler alert, we think that the next big opportunity is Web3, blockchain, tokenization. Another way of thinking about this, of course, is every failed idea from the dot-com bubble would work now, says Mark Andreessen of famous VC firm Andreessen Horowitz. So I just include this as it's while you should be open to these new opportunities, you've got to be a little bit skeptical as well. Understand there is such a thing sometimes as being too early. So the dot-com boom. Some incredible examples of online businesses that were viable business ideas, but they were just too early for the early internet foundational layer of the time. The internet just wasn't all that technology stack of the late 90s, early 2000s wasn't mature enough to support what Amazon, for example, is capable of today. So, we've got to keep that in mind. Is blockchain mature enough to support all these ideas? Right now, it's just blockchain is just at the beginning of that S-curve as well. But over the next 10 years, 15 years, it's going to be mature enough to support all these incredible new business opportunities. Something to keep in mind as well. All right, so I've talked about this before, but just briefly, the crypto market develops in cycles, right? So if we kind of dig into crypto now, the price tends to go up, which brings in a whole wave of new people who get exciting, they get interested. This enables a whole new a new suite of ideas. People get excited. This leads to new startups, new projects, and then the price goes up and the cycle continues. That's what happens in a bull market, and then we kind of have a bear market, and we flush out the kind of excess froth, some of the scams as well, people that aren't in it seriously for the long term, and then the builders, they just keep building, and then eventually the cycle starts again. So we can see that here. If you think about it in waves, right? So the early wave, very flat, not too much happening. It was kind of Bitcoin only. Then wave 2, Ethereum started to be, Ethereum was just at the end of wave 2, and then wave 3, that kind of first global boom, if you like, and then that crashed, and then wave 4, which we've really just had, or are still in. Really, you can see the market cap now approaching 3 trillion at its peak. Developer activity huge, startup activity huge, social media activity huge, just as more and more people start to engage. And so you can see, again, just looking at the same thing, it just shows that kind of growth across all those sectors as more and more people get involved, more network activity, more investment. So what is Web3? You know, if we're talking about blockchain, tokenization, it's all possible really because of blockchain and because of Web3. So if you think about the first era of the modern internet, so I guess 1990 to 2005, that first era was about open protocols that were decentralized and community governed, and most of the value accrued to the edges of the network, people that were using the network and people that were building the network. Now, the second era of the internet, Web 2, roughly 2005 to 2020, was about siloed, centralized services. Most of the value accrued to a handful of large tech companies. So again, if we think back to that exciting phase of the S-curve adoption, in this case, we're talking about Amazon, Google, Facebook, Twitter, all those big centralized tech companies. Facebook did incredibly well in that Web 2 era because they were able to capture all of the value from all of their users as kind of the whole world came online in that exciting growth phase of the internet. However, Web3 is a little bit different, and we're really just at the very beginning of Web3. We're in that stupid stage where a lot of people are questioning whether there is anything there. They're saying, is there value there? Is Web3 a thing? Is it a scam? Is there a point to using a blockchain? What's the point in tokenizing anything? NFTs are rubbish. They're burning the planet. That is the kind of the narrative from the naysayers, the non-believers. But there's potential there. There's something incredible is happening. It's just not, the whole world cannot yet see it. What is it? Well, it's the early stages of Web3. We're at the beginning of the third era of the internet, what many call Web3, which combines the decentralized community-governed ethos of the first era with the advanced and modern functionality of the second era. And this is about to unlock a new wave of creativity and entrepreneurship. It's exciting times, people. But of course, again, can't stress it enough, we're at the early stages. But that exciting runway, that's what happens next. All right, so here's another way to think about it. Web 1 was read-write or read-read. You couldn't do much on Web 1. You could just kind of read those early blog posts and kind of have a look at Yahoo and Netscape, yeah, Internet Explorer. Very exciting, but very limited in what you could do compared to today. Web 2, again, we've talked about, now it's the read-write era, with Web 2, which really means that, users are able to, instead of just being able to read in the early days, now users can read and they can write, which means they can publish a Facebook post, they can create a YouTube video, they can write a WordPress blog, and they can publish all of those things. But of course, the value goes to Facebook, YouTube, all those big platforms, Google, Amazon. Web 3 is read, write, own. So now Web3 gives people property rights, the ability to own a piece of the internet, and they can do that primarily through tokenization, the ability to own tokens which are issued on a blockchain, which proves that the user who owns those tokens and no one else can dispute it. And of course those tokens become tradable with anyone else anywhere in the world through the magic of the blockchain. And that is where we're going to, Web3, people. All right. So, it's a bit fiddly, the slideshow. There we go. Web3 empowers a collective-owned future instead of a corporate or government-owned future. So again, just a good way to think about it. You know, with a kind of corporate or government owned future, there are single points of failure and control, that kind of third party in the middle who can decide who or who cannot access a network. Whereas Web3 is a resilient, equitable and participatory network, again, which is key. All right, so again, we go back to our question, you know, what happens when everyone is online? What are the next SCurves? What looks a bit silly right now? All right, so we know we're talking about Web3. I also just want to dig into a little bit of this idea of tokenization, because I know it's a key part of Dacxi's kind of future strategy. So let's understand it a little bit. So asset tokenization is the use of blockchain technology to represent ownership or rights to an asset as a tradable on-chain token. Although it most commonly refers to the tokenization of financial or fungible assets, such as shares in a company or gold, asset tokenization can refer to the tokenization of anything possessing monetary value. That can be anything from a piece of art to a patent to an hour of a skilled worker's time. As such, asset tokenization is among the most promising use cases for blockchain, with the upper bound of its growth potentially encompassing nearly all of human economic activity, a dollar number estimated to be worth well over $100 trillion annually. And this quote is from Chainlink, actually. I pulled this from a Chainlink blog. So, you know, 100 trillion annually, that's obviously an incredibly large number, huge addressable market. I think you've got to, you know, that's not going to happen overnight. That happens over decades or even generations. It happens over a long period of time. But, you know, I just include it because it shows the kind of the scale of the opportunity. All right. So, what is asset tokenization? Now, if you watched last week's show, I talked a little bit about this last week because I pulled this from the Dacxi Precious Metals tokenization ebook, which anyone can download. But yeah, it does explain it really well. So, since we're talking about tokenization, probably worth just zooming in and having a little look. So, okay, so what is asset tokenization? Let's just run through this. Ooh, again, we can make it bigger, which helps. So I suppose, as we've kind of learned, tokenization is the process of converting rights or a unit of asset ownership as or into a digital representation on a blockchain, or put simply, it's the process of creating digital versions of physical assets. And while Dacxi is at the forefront of this transformation into wealth creation and management, most financial entities are only just starting to realize the full potential of tokenization, but there is no doubt the potential is limitless. As Chainlink themselves said, $100 trillion annually over the long term, they reckon. So how does tokenization work? Well, tokens rely on smart contracts. Dacxi Precious Metals tokenization uses ERC20 tokens built on top of the Ethereum blockchain. And of course, as I'm sure you know, Ethereum was developed specifically to enable smart contracts and, well, essentially be able to tokenize anything of value, which is really what we are talking about. So when you purchase digital tokens representing an asset, that ownership transaction, of course, is recorded to the blockchain, meaning that you can prove that you own those assets and your ownership of that asset is immutable. So there are two main types of asset tokens. Covered this last week, but again, just really briefly, we of course have fungible tokens and non-fungible tokens. Fungible tokens have two key features. They're interchangeable. Oh. Sorry about that, viewers. Just trying to zoom in so we can see, so we can read. But as I was saying, yes, fungible tokens have two key features. They are interchangeable. So it really just means like, one Bitcoin is worth one Bitcoin the same way $1 is worth $1. It's what makes a global transactional finance possible. So you can buy something and you can divide a dollar or divide a Bitcoin, give someone change if you like. It just makes global finance possible because that token is interchangeable, it's fungible, it's divisible. Non-fungible tokens are a bit different. They are non-interchangeable because they are unique and they are non-divisible. So that is what a non-fungible token is. NFTs are a really good example of that. All right. So Dacxi precious metal tokens are, of course, an example of fungible tradable tokens. And, of course, they represent real-world physical precious metals. So I talked a little bit about this last week. I think we did an episode about Dacxi precious metals and why they can be, a potential hedge against the current uncertain situation that we find ourselves in with global financial markets at the moment. So if you're interested, do encourage you to watch that episode to kind of learn more. But I'm sure we can just kind of skip over some of this again and now. So we're talking about tokenization, of course. Dacxi precious metal tokens are an example of fungible, tangible tokens. But if we ask ourselves the question, as we look forward, what kind of assets can be tokenized? If we refer back to Chainlink again, saying that the total addressable market, $100 trillion annually, that's a lot. We're going to need to include a lot of different asset classes if we're ever to reach anywhere near the upper bound of that kind of economic value accruement. So let's run down our list here that Dacxi have provided for us. Handily, there's a few. So we've got precious metals, obviously. So that is a real world use case that is underway. You can buy tokenized precious metals, gold, silver, platinum, right now on the Dacxi exchange. Did you know that, listeners? You probably did, but think about it. That's incredible. You can buy a token, a virtual representation of actual physical gold, and you can do it just with a few clicks from your computer. So you can kind of see the benefits there as to why tokenization is a game changer in terms of unlocking the value in some of these global asset classes that haven't been able to be tradable, have their liquidity unlocked and accessible to a global addressable market of billions and billions and billions of people. Of course, what's made that possible? The smartphone, the internet, all that stuff that we talked about at the beginning, becoming mature. And now we're at the next kind of growth cycle. Tokenization, blockchain, Web3 is just starting to unlock it. So precious metals are a great example of one of these tokenization use cases that has already been unlocked. So what else? What comes next? Venture capital funds, bonds, commodities, real estate. Think of real estate. Real estate is one of the single biggest asset classes in the world. What happens when it becomes possible it is possible to tokenize individual buildings or apartment towers or skyscrapers or city blocks? Get anyone to invest in an entire city block. What happens then? All sorts of incredible new opportunities. Same with sports teams, Why shouldn't you be able to just invest in any leading sports brand around the world? Again, just through a few clicks from your computer or smartphone. It's going to happen. Same with artwork, it's happening already with, NFTs. Same thing, but eventually, those kind of blue chip, physical, real world artworks. What happens when the owners decide to share the love and make it possible for anyone to get a piece of, a valuable piece of art? That will happen too. Same with music, classic cars. It's coming. So, what are the benefits of asset tokenization? We've talked about this a little bit, but we can dig into this with a little bit more detail here. There are many benefits. One, of course, is that increased liquidity that we talk about. So, for example, an office block developer could tokenize a building into 500,000 different fractions, each representing a tiny, 0.0002% share. And they might sell 400,000 of the tokens and keep the remaining 100 fractional shares to generate a pro rata rental income, or to sell later. But it just gives developers much more. It gives them options. It gives investors options as well. More benefits: fair prices. Assets that can't be liquidated often have an unestablished market price. So tokenization of assets can increase an asset's liquidity. Selling small fractions of ownership also lets owners charge a fair market price. So it's this how markets work. The more traders or buyers that have access to any given asset, the fairer that asset's price will be in the market. Supply and demand. What else? We've got reduced management costs. Asset ownership transfer often requires intermediaries to handle the paperwork. It's all just very inefficient. So tokenizing an asset on a decentralized platform automates many parts of the process, cutting out the middlemen, making markets more efficient. The process, of course, is transparent, since the blockchain technology behind asset technology tokenization is immutable. Everything is on-chain. It's verifiable. You can see what transaction has taken place, the complete history, and you can trust the process that is exactly what has happened. Secure identity, yes. What else? A broader investor base. This one is one of the big key ones, of course. With most high-value physical assets, there's a limit to the level of fractionalization possible. However, once assets become tokenized, this limitation is removed, and it becomes possible to buy and sell tokens that represent tiny fractions of ownership, which opens the door to a far broader investor base. Simple as that. Which also enables broader geographic reach, reduced settlement times, decreased cost for reconciliation and securities trading, regulatory evolution, improved asset liability management, increase in available collateral. I'm skipping through those last ones, listeners, because I don't want to bore you with the finer print here, which of course you can read for yourself in this ebook. If you do want to dig into it, you can just download this from the precious metals page on the Dacxi Wealth Platform website, of course. All right, the asset tokenization process. So how do you actually tokenize an asset? Well, there are 5 basic steps to do this. Number 1 is you evaluate and confirm that asset. For example, if we use precious metals, we've established, well, you need to establish, is there a market for them? Precious metals, tick, yes. Then we can value the tokens. If it's a bit harder, if there's no existing market, in that case the valuation then needs to be done by an accredited auditing or accounting firm. All right, step 2, smart contract generation. Once your auditing is finalized, you create a smart contract, and the price and number of tokens generated correspond to the price and valuation of that asset. For example, with the Dacxi tokenized precious metals, that part of the process was completed by the Dacxi tech team. All right, then you need step 3, which is the tokenomics. So when you generate the smart contract, the issuer, you've got to decide, what is the total supply of the tokens? How many will be made available? So, there's always a fine balancing act. Too much supply can put off investors. On the other hand, if there's not enough supply, there's a risk of poor liquidity. So, yeah. Step 4, equity or cash flow. The issuer must decide whether the tokenized assets what the tokenized assets purpose is. Is it to provide equity? Is it to generate a profit share or a cash flow? For some tokens, for example, Dacxi's precious metal tokens, the answer to this question is clearly 100% equity, because the precious metal tokens represent real-world precious metals. And finally, the last step, of course, is regulatory approval. The tokens must comply with the relevant securities and financial products regulation in the territories they will be offered in. All right, and so kind of that's it really for today's show, team. So, of course, if you're interested in, delving more into Dacxi's tokenized precious metals offering, would encourage you to simply go to the Dacxi Wealth platform, and of course you can, if you've got an account, I imagine if you're watching this you already do, you simply go to the precious metals page. You can buy those gold, silver or platinum Dacxi precious metals tokens. You can buy them individually, or you can buy them as part of the Dacxi Precious Metals bundle. Dacxi's done all the hard work. They've created a bundle: 60% gold, 15% silver, 5% platinum, 20% Dacxi coin. And and it's a super easy way just to get started with precious metals investing. Again, all possible with just a few clicks from your computer, because of blockchain, because of Web3, because of tokenization, which of course is made possible by all of those technology waves, innovation waves that have come before: mainframes, PC, internet, smartphone, now Web3, blockchain. Again, we're just at the beginning of this. If there's one thing you've learned from today's long and rambling, but hopefully fun and informative show, viewers, then we're at the early part of the adoption curve, which is where the opportunity is. You could argue that the risk is there as well, but certainly the opportunity. All right, there's plenty to think about. Hope you enjoyed that show. That's it. This was the Crypto Wealth Cafe. Thanks for watching, team. We'll see you again next week. Bye for now.